afternoon. Welcome to OptionsTender. It's Thursday, March 20th, 2025. Welcome, traders. We're going to take a look at SPX. We're going to look at around the horn in a daily time frame. We're going to focus on those indicators, but I'm going to start us off with some options expected move jargon. So I know it might be boring stuff to some of you, but just make sure you play this at 1.25 speed or 1.5. Get all this information in this video all the way through, and I'll show you positive market structure in my opinion, but I know that there's two sides of the trade always. That's what makes a market. So we'll show the bull and bear perspective throughout the video. All right, so we're doing this intraday about 12:30 Eastern Standard Time. If you want to get these intraday, consider becoming a YouTube member. It starts off at 99 cents. The next tier is $4.99 a month, you guys. Great deal with Discord and trade alerts. Let's jump into it. Okay, we have SPX. I'm showing right now our trade tab here on Thinkorswim. We have options expiration tomorrow. So this is going to be a wacky market. I know that it seems like the market's going nowhere. We're in an equilibrium right now. But as of the morning expiration, we're looking at a plus or minus 50 point move. So I do believe that we do have a lot of options expiring. Some are saying that most of them are puts that would release the market in the morning and allow some movement. And we show the expiration for tomorrow evening to be about plus or minus 62 points. Now, I think that they may have this a little bit wrong. I think that we're going to hit one of these sides of the options expected move, and I'm biased to the upper end, and that's about 50. That's about 5,750. Now, as I talked about in yesterday's video, that's going to be a very important number. So if price does not break out of this equilibrium, then we have an inside week, and we'll be looking for the resolution to happen next week. Okay, so that's the risk for this week's options expiring worthless because of no movement here. Okay, so then, therefore, we'd move our positions out to next week if you already don't have those out there. Okay, so right now, I think looking at this daily time frame, you could look at this as a very positive situation, holding on to the close of last week, right here, dead center at about 56.40. Okay. So that continues to look bullish in that point of view. But if you're bearish and your position started up in the 5,700, hey, that's your stop, 5,700. Great. Then you're still in charge. Maybe this heads to the downside. If you're a bull, you can raise your stops, perhaps from here. That would make sense because that would be your higher low here at 5,600, and now you can raise it to this positive market structure. And I'm going to show you on the 65 exactly what I mean. But in the meantime, we'll go ahead and change boards, look at the oscillators, and we'll go from there. So here's the bearish rising wedge we broke down from. We're holding on to, and lo and behold, the bottom of this options expected move here, the close. This is also the support area that we're looking for this bounce to come in from. With the volatility, we spiked underneath it, but now holding on to this area right here. So this is still looking positive above the green area, clawing our way. And as soon as those options expire, I believe it'll let price go and sling to the upside to possibly close this gap here and reach the options expected move about 57.50. All right, and that'll be 570. I think it's 574 and change on SPY, and we'll take a look at that too. So the McClellan Oscillator, this is super important. We're still not in that overbought territory. I think we get well into it. Again, the breakout from this downtrend here, we're now in an uptrend. So I think it's going to continue to rise at this point. Now looking at our options tender setup here with the MACD, RSI, and slow stochastic. First, our moving averages. We're fighting with this 8 EMA. That's been the issue. It's held price the whole way down, and now we're having trouble getting above it. So we're right on it right now, and this will be our indicator for the momentum rise. And you see that it's sideways at this point. So technically, we're in a neutral position, but like I said, on the lower time frames, I think we're making positive market structure. So the first spot here, if and when we break out of this this consolidation, I'm highlighting the 200 moving average, and that's at 57.48. So that's precisely where we want to go, where the options expected move is. And the 20 moving average will probably be there by tomorrow or Monday. So that's going to affect the move. We'll probably pause here. If not tomorrow, if we make it up to this point, maybe that's where we pause tomorrow. And I think that we'll get follow through. If you have a positive Friday, you look for Monday to follow through from what Friday does. We'll probably gap over here, super important area. And then we'll continue our march to the upside. Now, if you're looking at this as a bear flag, then again, we'll point that out on the lower time frames, but then you'll be looking for a negative Friday. You'll look for that to break down. We'll start to break down, and we'll continue to look for Monday to be negative, okay? I don't mean to be the person that says, well, the market could go up and it could go down. Although that's the truth, I think I'm building a case that there's positive market structure. Now, here, looking at the MACD, we talked about this yesterday. We're getting ready to get this cross. We're so close. I think tomorrow we get this positive cross there, and that would allow the market to move, to continue to the upside with momentum, getting a bull cross. All right, the histogram is so positive, or so neutral at this point. Really. It's at a negative 2, just so close to zero. I think we'll get that crossover tomorrow, unless the market breaks down in a nasty way. And so we had our positive divergence on the daily time frame. That's a strong indicator for a good week or two bounce. And so we're at this 50 line here. That's again that neutral type point, and I think we'll continue up there tomorrow, as soon as tomorrow, or at least going into next week, if price stays in an equilibrium. So the longer that price stays in that equilibrium, I think the bulls are gaining the positive structure, and it's going to break to the upside. So we have the slow stochastic looks like it wants to cross over here. We'll see if that's a whipsaw, and we're just getting our trend to the upside, but we're not in this overbought territory again. I think that oscillates up here for a while. Now, our DMARC. Okay, DMARC, here's another day. Just a real quick glimpse. We're getting a 5 count. And once again, I think we'll get that 9 count, and we'll continue to head higher, and we'll see if that marks a turn or not. The awesome oscillator, even more positive day by day, green, setting more positive strength. And I think we'll test that 0 line, or possibly even whipsaw, by the time this is done and said. Okay, so let's go over to SPY so we can check out the money flow. Keep the divergences on. We're not looking for any divergences at this point, but we'll just see how this develops. We had this positive divergence in the oversold territory, those conditions there. We got into the conditions with this price action here, made a new low, made a new high, and the indicator. So we'll look for this to oscillate up. Maybe I can even draw some sort of trend line or so at some point to see if it continues to hold that trend. Bollinger Bands. No setup yet here. We're not even to this mid-range, which I do think we get to. And again, it's right at the zone that we're talking about, that 474, 475. So by tomorrow, if we hit that mid-range, I think we'll probably get our pause there. All right, and if you, let's see, let's change the boards here. Let's go over to the time and price. 320, something happened today. Is that a top? Do we, is that a bottom? Is it a top? We're in an inside day. We're totally within yesterday's range. So not sure what that's going to do. We're going to leave that there to see what happens tomorrow and see what happens from here. But overall, 328 to 41 is the next cluster. And I think that's where price tops. I think that's where we're going to look for some sort of top. And then we continue the descent lower. Nothing to see here. We can bring this one on. And again, we'll watch this develop. But I think it's going to look something like this to where we have our wave 1 in. We're looking for wave 2. Right now, we're in wave 2, in my opinion. And then we'll look for a surge to the downside for wave 3 and 4 and 5. Okay, that's what I'm really looking for. But there is an alternate to this, okay? And I'll show you on this board that we have this trend line here, okay? It's a possible channel bottom. We have 2 points at this point. We have 2 points touching. And we'll see if this creates a valid trend line. And what I mean is we have our initial wave 1, we'll get our wave 2, and that we have a shorter wave 3, 4, and 5 where we're losing momentum to the downside. And this is possibly like a leading diagonal or something like that, to where we don't have a massive move to the downside. We actually create probably a wedge going into this. That would be my alternate situation where the wedge loses momentum. Wave 1 is the longest. Wave 3 can't be the shortest. And so wave 5 will be really, really small, where we crunch up and we hold on to this trend line. And then that's where we get a wave 2 bounce. And then we continue the trend lower. So that would be a wave 1 on a higher degree after this wave 1 formed here. So that's our alternate scenario. Otherwise, I think this is the primary situation where wave 2, nice and high bounce, and wave 3 is just a harsh move to the downside. That would be typical. Market never wants to give you typical once you mention typical. All right, so let's go over to the futures. Just putting the futures out there so you can see some of these Gann lines. They held nicely. Holding, and then we're holding the mid-range here of this 90-degree box. This isn't my work, so I'm not going to explain exactly how to get these in such. This is +3 fuse. The guys Barry, Barry and oh my gosh, I have to. Maybe I can put that in the description if you want to watch their videos here, but I have to move these because the contract roll messes up your trend lines here. So just a quick glance at that. That's where a beautiful spot where price is holding, and we'll probably pause up here at the 58.60. But again, I think price ends up a little bit higher, if not all the way back to the mid-range up here, which would bring us into that 6,000, 6,100 area, 6,000 on SPX. QQQ. Not much to report here. We're just bouncing around in this. We have a consolidation area here that we built, consolidation, so you can see support and resistance. That's all we're bouncing around. And so basically your market structure, we can form a triangle if we want to. So our market structure is getting positive here, but you're getting lower highs here. So is anybody winning? Not really at this point. I just think it ends up the resolution to the upside. And again, I'll show you on the lower time frames why. But price action is getting really tight here, so we're going to have a big move. Whether it's up or down, we're going to have a big move. We're in this range. We had 1 day, 2, 3, 4, 5, 6, 7, 8, 9. 9 days that we're getting ready to explode. SMH. You can clearly see that SMH is holding against that old megaphone pattern that we have here. So is this, if I had to rely only on this chart, I honestly would say that this is a 1, 2, 3, 4, and we're trying to get wave 5 in here, and this is negative, okay? So that's one check mark for the bears that I'd give them. Other than that, I mean, we're holding on strong. It's the same thing. We're in equilibrium. If we break these lows, we're probably going to head lower here at 224, 223. But we're looking to break back into this megaphone. That would be positive for the bulls. Okay, so IWM. IWM's in the same situation. So you could give this 2 check marks, but I don't think this one is. I think this one's a little bit more positive because we're at this really, really big support area that we held on to for a very long time, and we ended up getting some traction here on the positive side. And really, this is a breakout and just a back test of that breakout. So if we start to break down underneath, it'd probably be a quick whipsaw with positive divergence on the daily time frame. Again, I'm looking for these to hold. We'll see what happens here. So far, an inside day, just like the rest of the indices. So tomorrow's going to be very telling. Came up to resistance here, so this move could be over for DIA, but I'm really looking for tech to take over anyway. So we'll see if DIA breaks out above this or just kind of holds sideways for a while. Or again, if you're a bear, you're looking for this to break down. The VIX. All right, VIX is at a support area. So this good support. So again, Friday is going to be telling, is this a inverse hammer and we get a reversal here? Or do we break down, continue, which I think is going to happen, down to this range down lower? I don't think this bounce was enough on SPY. I don't think the bounce is enough for this to reverse and go and make new highs. I guess it's possible that this could bounce somewhat, make a lower high, and then continue. And then that would mean the market probably makes a new low, or at least tests the low, and then diverges from the VIX, where it gets a new low and the VIX does not get a new high. All right, that's always a possibility. But again, that's not my primary look at things. I'm just giving you the scenarios that if tomorrow is bullish for the market, then this should start to break down or even gap down underneath this level. The easiest way for the market to get past big levels is to gap underneath here. And again, SPY gapping above. All right, so we'll see what happens in the morning tomorrow. Now let's go down to the 65 so we can just look at this backwards. We'll go backwards. And this will give you an early signal here. So we're testing the channel right now. So if this breaks out from the channel, we have a situation where the VIX could be breaking out. Like I said, could maybe even close the gap. But this week, I don't think we'll hit the options expected move to the upper end. Just probability. I'm just looking at probabilities. We hit the lower end of the options expected move. I don't suspect that tomorrow we'll hit the upper end, but if we break out from here, that'll be the first sign that, hey, maybe something else is happening. Maybe the market is a little bit more bearish than I thought, and we're in a wave 4. And again, we'll visit that bull bear line I was talking about. It's holding today. So let's go over to SPY. SPY on the 65. Now, if you're a bull, you're looking at this. We have a wave 1, 2. We had a 5-wave look here, right? So that's a 1, and then we had another 1, 2. Going right back into support, holding this trend line. This trend line is going to be key. So we'll look at both of those. If you're a bear, let me draw another line. Guess what? Bear flag. So we start to break down from this bear flag. This could possibly be a leading diagonal, and you can make a higher low and continue higher. But I think this is very positive so far. And we hold this trend line and we continue to break out from up here. And you can see it will still have the bull bear scenario. Even if we make it to this 570, about 574 options expected move, we'll still be within that bear flag. Okay. But at that point, we have something else that changes. And here's what it is. So if we change boards here, we have this possible wave 4, the top of 2, down to the bottom, we have a 38.2% retracement. It's very typical for a wave 4. There's no rule that says it can't go higher, but that would be just a different situation where it's just not normal where it'd go up to like a 50% or so. So you have this 382 bull bear line that I'm holding here. We have a trend line going up. So if you're a bear, I want to say you want to keep price underneath that 569. All right. You want to set your stop at, zone, not a hard stop, but at 569. You want price to stay under there. You want the trend line to break, and we head lower. There's still a possibility that all of this, maybe one move, leading diagonal, and we have a 62% retracement. So it's not all is lost for the bulls, but the momentum certainly is lost at that point. Okay, so you'd be looking for an A, B, C, and done, right? I'm looking for this move here where the A, B, and then we're starting this positive structure for the wave C. So we're just getting started. We had our 1. We pulled back this morning with a gap down for wave 2. And now if we dig in even closer, let me move this arrow. If we dig in even closer, you can see you have your A, B. Okay, that's done. And now you have your 1, 2, 3, 4, 5 wave move up here, or an impulse 1. You got your gap down for wave 2, so 1, 2. And now on a minute level, we have a 1, and we're pulling back for wave 2 right now. Okay, so all this is going to have to resolve to the upside, if that's the case. All this is going to have to resolve. Now, this structure is negated under 562, and I can even get an exact number. The low is 562.60. Price breaks down from 562.60. That crushes this whole scenario that I'm talking about, at least this portion of the structure where it's a 1-2 setup. All right, you have a 1-2, 1-2 setup. That's what I'm looking at. If you don't know what that is, I have a video that for 1-2 setups. Okay, bull bear, doesn't matter. It's the same thing. Now, if price breaks underneath this 559, that's even more bearish, and it takes out this entire structure right there. And then it's probably, I'm probably wrong, period. Okay. And then we'll just have to wait to see what price does at that point. But this would be our breaking point to where something else is happening, and we'll have to let this all play out. All right. But you can continue to hold your puts if you're a bear with that trend line there. Here's the trend line. If we start breaking down from this level, 564, and also this trend line, then you're likely breaking down from a bear. The bears will have the ball. Okay. So we're going to look for this to hold. Bullish, break, bearish. All right. Let's go to some of the indicators. So the DMARC had the sell signal, exhaustion here, and we're not really getting much price action happening here. Also, there's this downtrend line. I didn't even talk about the downtrend line. That downtrend line's holding there, and so price is getting really tight into this apex right here, okay? And so I think if we break back above this downtrend line, that'll be an early signal that, hey, we're going to get a little bit more bullish than in the near term, and that we're probably going to make it up to that 574 spot. Remember, the 200 moving average is there, and the options expected move is there as well. OptionsTender setup. Okay, sorry to give you a whiplash. The moving averages, we're holding above all of the moving averages. We're holding above the 8. We're testing the 8 EMA, the 20 is underneath, 50 is underneath there. We have not gotten to the 100 moving average, and the 200 is well above us. So still in kind of a neutral area. I mean, we're in an equilibrium. That's what's happening. And another reason why I think we might resolve tomorrow this move, whether it's to the downside or upside, is because we're getting into an apex here. Okay, and so that's not going to last much longer. As a matter of fact, we might even resolve by the end of the day. Who knows? So looking at the MACD, let me grab the top of there. Still positive. We're in a positive situation. We're in bull territory above the 0 line. Bull check mark. Same thing here. Now, I know we said this is possibly a negative divergence because we made a new high. So that's a check mark for the bears. But really, we're right back into that 50 line here. And so it's really just a neutral spot. All right, and the slow stoch is starting to sell off. So we're getting that sell signal. And let's see if we hold any sort of trend to the upside. So this is somewhat, we're in bullish territory. We're actually getting to that neutral point. So we'll see if the 50 holds. But if we start breaking down from the 50, then I think the early signal that price is going lower. All right, so far neutral. So neutral, positive. That's how I see this. Awesome oscillator, positive situation. And again, this is showing negative divergence at this point, but we're in a neutral state. I think this is going to burn through and it's going to head higher on the upside. We're in a positive zone right now. Bollinger Band, we just tested the top. We were an overbought. So if you're really short-term trader, you had the overbought conditions at the top of the Bollinger Band, and that you could have took this move here, but clearly we're not that fast of traders. So we like to swing one day to 1 week typically, and then on our larger primary swings, which we're not in right now, to the downside is what we'd typically take a month out. All right, so let's go over to, I'm going to go to ES. I know don't typically do that because I wanted to show you again how it looks like a bear flag. It's just a beautiful look here for a bear flag. But again, it always looks like that when you're in these situations where we're basically at an equilibrium, and the bulls say, hey, we're forming these structures here. It looks beautiful. You have an impulse, possible 1 or a B, C for A. That's possible too. But I think this is a 1, 2 or an A, B, either one, right? Because we're not going to know if this resolves to the upside, whether this is going to make new highs or not. We think we're going to make a lower high. So A, B, or 1, 2, and then a whole nother 1, 2. That's a 1, 2, 1, 2 setup. And even this next 1, 2 right here, that should hold these lows. So put on your alerts. I don't think price breaks down from here. I don't think price breaks lower than 56.84. If it does, then I'm going to reevaluate what I think it is happening and probably just be out of the market at that time. Okay, so overnight, the futures should not violate 56.84. Let's go to Qs. You're really just seeing the same thing. You'll see that we're in an equilibrium. We need to get above the 23.6. That seems to be the wall right now, which is where the gap starts here. And again, I think we're forming this positive structure. We shouldn't see price violate this trend line. As a matter of fact, you can probably call it, and I will call it, a ascending triangle at this point. So we have good resistance here, and we have the trend line here. So I think this resolves to the upside. We should not get lower than this low here, and that's at 476. We should not violate underneath 476. I'm going to set my alert. And that's approximate. So below there, reevaluate. SMH. And I haven't been talking about the options expected move, but we've already been to the bottom of the options expected move. It is not probable that we make the upper end. Okay, so I think that's on SMH. Okay, that's different. If I'm going to talk about this, then I have to. So we have not gotten to the lower end on SPY. We're actually closer to the upper end. I think we get to the upper end. QQQ. Not even close to the lower end. I think we resolve this ascending triangle to the upper end, the options expected move. And then you do have a measured move here as well. If this is an ascending triangle, you can just take a line, go straight up and down at the widest point of the triangle, and then put it on top of the breakout point. And that brings us to close this gap up top here. So that could even happen tomorrow or into Monday. So that would be your measure move up there, and that would be at about 502. SMH. This is 1, 2, 3 trading days. Yeah, so SMH, we may have tagged. No, I don't think so. So we have not tagged the lower end of the options expected move. Again, this should resolve to the upside, in my opinion, unless we break down from the other indicators that I was talking about, the other indices. So the options expected move, you can mark those down if you need to. IWM, we almost tagged that options expected move. And now look at this. We had the inverse head and shoulder. That's left shoulder, head, right shoulder. We had the breakout. What are we doing? We're just back testing. It's simple as that. So I do think this resolves to the upside. If we start to break trend, I'll draw a trend line here, then it's likely that that's much more bearish than I thought. So we'll put that trend line there. We already back tested once. We'll see if this is forming a 1-2, 1-2 setup here to go higher. And it shouldn't get underneath this this candle here, which is the low of 204.20. Otherwise, it starts to break structure down. DIA, we don't trade this very often, but we already hit that options expected move to the upper end. I don't think this does a whole lot. Again, we're going to have to see the other indices carry much more of the weight. This is up there. It'll probably resolve back onto the options expected move and just kind of oscillate there tomorrow. And we already did the VIX. I think we're good here, you guys. So thanks for watching here at OptionsTender. Don't forget to like and subscribe to this video, to this channel. We're going to go through this stuff each and every day, and then tomorrow we'll get the higher time frame incorporated in there so we can get ready for the next week of trading, which I think is going to be positive. So stick around, and we will see you tomorrow.